Good morning and welcome to our webinar on financial uncertainty during COVID-19. The webinar will begin in just a few seconds. Good morning and welcome. This is Erica Manuel. I'm the CEO and Executive Director of the Institute for Local Government, and I'll be your moderator today. As you may have heard, we are recording today's webinar, and I will share that recording, the slide deck, and related resources with all the registrants following this webinar. As you also may have heard, all of your lines have been muted for the duration of the webinar. However, you can ask a question at any time by typing it into the questions box on the right-hand side of your screen. If you have any technical difficulties during this session or any questions of our panelists during their presentations, please feel free to use that function. Next slide. This webinar is designed to address the myriad of issues local government leaders are facing as they work to mitigate the negative fallout from the coronavirus pandemic. We know that local governments are projecting significant decreases in revenue as a result of this outbreak. From sales tax to TOT to other fees and recoveries, we have new projections that suggest the negative impacts will be severe. This webinar is designed to help you learn more about statewide budget forecasts and hear tips that will help you begin to navigate the crisis and prepare for the future. Next slide. This is the agenda for today's discussion. I want to give you an overview of the technology and logistics and then dive into the content. I'll start with a short overview of ILG for those of you who are not familiar with the Institute for Local Government. Then I'll jump into the COVID fiscal impacts by jurisdiction type. Next, we'll have presentations from our main panelists before we jump into the Q&A. We structured this webinar to allow plenty of time for questions because we know this topic is a really big one, and it's a really important one that we want to make sure that you get as many answers as possible, or you get closer to those answers, even if we can't provide them. Next slide. So let's talk a little bit about how this webinar will work. We have all been sheltering in place for 6 or 7 weeks, and I'm sure you're all Zoom and remote work experts, but it's always nice to clarify these technical details. So as we mentioned today, all participants will be in mute during the entire call. For those of you working from your home offices, that minimizes the risk of the inevitable child or pet interruption during the presentation. If you need to ask a question, you are welcome to do so, and I know that there are plenty of opportunities during the webinar when you may have questions about either technical or other content information. There is a question box that is separate from the chat box. Please note that you should type those questions in the question box, and the team that's working throughout behind the scenes on this webinar will be reviewing all questions and determine the best time to answer them through the webinar. Logistic questions will be answered as soon as possible, and most programmatic and content questions will be asked during the Q&A section at the end of the webinar. Next slide. At this point in the webinar, we'd like to know who's on the line. We have quite a few of you, and while we can't see you, that doesn't mean we don't want to know who you're talking to. So we'd love for you to tell us about yourself. We have two poll questions that will help our panelists better plan for your questions. My ILG colleagues, Randy, Kate, and Melissa, are behind the scenes working on the technology for this session, so they'll be administering some of the logistics of this poll. Randy, Kate, and Melissa, please proceed. Please tell us about your agency or organization. Are you with a city, a county, a special district, a state agency or department, or are you with a private, corporate, nonprofit, or other type agency? Feel free to use your mouse and click directly. For those of you on the phone only, I don't think you'll have the option to reply to this poll. Excellent. As you can see on the screen, we have 50% city representatives, 28% county, 5% special district, very few state agencies, and 15% private, corporate, nonprofit, or other. Thank you. One more question. What best describes your relationship to local government? Are you a local government staff? Are you an elected official, a consultant, or other? All right, it looks like we have a pretty strong majority of staff on the line, with about 10% elected officials, 13% consultants, and 6% others. Thank you so much for sharing your information. It will help our speakers tailor their remarks so that we can make sure to get you what you're most interested in. Next slide. So now that we know who you are, it might be appropriate to make sure you know who we are. As I mentioned during the introduction, my name is Erica Manuel, and I'm the CEO and Executive Director of the Institute for Local Government. I'm relatively new to this organization. I've been at the helm for about a year, and what a year I picked. It's full of incredible highs in 2019 and some significant challenges like the one we're all experiencing right now. Just like you, we are navigating COVID, and we're in the midst of what is perhaps one of the most invasive and destructive crises to hit local government in over 100 years. The good news is that ILG is nonprofit, nonpartisan, and we're here to help. We are the nonprofit training and education affiliate of 3 statewide associations representing local governments: the League of California Cities, the California Special Districts Association, and the California State Association of Counties, or CSAC. Together with our affiliates, we serve over 2,500 local agencies that include cities, counties, and special districts. We provide practical and easy-to-use resources so local agency leaders can effectively implement policies on the ground. We've been around for 65 years, and we love and understand local government, and everything we do centers around helping local leaders. Next slide. ILG has 4 main program areas or pillars of work: leadership and governance, civics education and workforce, public engagement, and sustainable and resilient communities. Our mission is to help local government leaders navigate complexity, increase capacity, and build trust in their communities. And we do that by offering a range of services across all of our pillars. We do education and training like this webinar, but we also offer deep technical assistance and capacity building to help stretch your ability to deliver on programs and services. The team at ILG can become an extension of your staff, helping with things that you don't have time for or the capacity for, like grant applications or public engagement support. We also convene key stakeholders and provide facilitation services around sticky or challenging topics where it's helpful to have a neutral party in the room that understands how local government works. Next slide. When the COVID-19 pandemic hit, we pivoted just like you did to help ensure that local leaders had the resources you needed to navigate the crisis. Make sure you check out our website for local government resources related to COVID. We've included some state and national links, executive orders, tools and training opportunities, and a new section that we're going to be building out, which highlights some of the best local government responses we're seeing across the state, so we can share those stories of local government done well. So just visit ILG's website at ca-ilg.org/COVID-19. Next slide. For today's webinar and for all of our COVID response efforts, we really wanted to make sure that local government leaders have the exact information that you need to help do your jobs on the ground. This is the 4th COVID-themed webinar we've done this month, and our intent with this particular topic is to begin the conversation about fiscal impacts. We know that whether you're a city, county, or special district, this is a huge issue. Every local agency is scrambling right now, trying to find out how to navigate this uncertainty. The next few slides will talk about some of the statewide numbers and specifically how those impacts may differ by jurisdiction type. Next slide, please. So we're going to start with cities. The League of California Cities recently released a survey of California cities and the fiscal impact of COVID on city revenues and expenditures. This survey found that cities are bracing for a nearly $7 billion general revenue shortfall over the next 2 fiscal years. This shortfall will grow by billions of dollars if COVID-19 stay-at-home orders extend into the summer months or even longer. All cities, regardless of size and geography, are impacted. Cities most severely impacted are those with high dependencies on sales tax and TOT, and particularly those around hotel. Next slide. We also now know that public services will be dramatically and drastically impacted by this loss of revenue. Regardless of size, at least 79% of cities are planning to cut or decrease public services because of COVID. Cities with 25,000 to 49,000 residents are even more stark of a description, with 90% likelihood of cut. As we're seeing, COVID does not discriminate by size or geography. Next slide. We also know that core services will face significant impacts. Cities are projecting deep impacts to core services because of revenue shortfalls and deferred revenues, and again, this is regardless of size and geography. 84% of cities are reporting that police services will be adversely impacted. And anytime we have threats to public service and safety funding, there are wide issues and concerns across all spectrums and stakeholders. Next slide. As we look to economic development and workforce development, another thing becomes very clear. The jobs will be severely impacted in both the short and long term. Over 90% of cities are reporting that they are considering cutting or furloughing city staff or decreasing public services. 72% of cities are saying they may take both actions. I think the key takeaway from this slide and these slides prior is that all cities are impacted regardless of population size. It's not a rural versus urban or a coastal versus inland. It's all cities. The cities most impacted regardless of size are those with the very high dependencies on hotel and sales taxes, and that includes both small and large tourist cities. Next slide. As we move to counties, the California State Association of Counties is still compiling the regional data, and we should have some additional insights from them later this week. But we do have some preliminary stats from NACO, and the outlook is just as grim. America's counties could face budgetary impacts as much as $144 billion in lost revenue, with increased expenditures through fiscal year 2021. More than $54 billion in additional property tax revenue is at risk in states where counties have not yet collected any or all property tax revenue in fiscal year 2020. Between lost revenue and increased expenditures, small counties may see a 24% reduction in their budgets. Next slide. This slide really illustrates the previous points. And again, it's key to note that there's no size or geography that's being spared from this. Next slide. With specific regard to California's counties, we have a few concrete examples for your reference. Los Angeles County has identified a $1 billion impact, that's billion with a B, in sales tax collections by June 30th, and potentially up to $2 billion by the end of fiscal year 2021. Next slide. Part of this challenge is that the county costs are going up significantly. Preliminary estimates from NACO show that counties could expect a nearly $30 billion increase through the end of fiscal year 2021 in expenditures like health, human services, justice, education, housing, and more. Locally, Contra Costa County is estimating that the crisis will cost its health department alone $46 million through the month of May. That's a pretty major impact. Next slide, please. The last local agency we want to talk about is special districts. Special districts have a very unique role in our COVID response, and very few agencies are exactly the same. We do have preliminary numbers reflecting a recent CSDA membership survey, and the responses are telling even if they're not complete. For example, 31% of special districts expect major to significant budget impacts. 25% anticipate the immediate need to furlough or lay off employees. 47% expect to raise fees, cut services, or decrease personnel. These are pretty daunting numbers. The virus and its economic impacts on local government services and workforce do not discriminate by the size or location or across jurisdictions. They're all facing very difficult decisions. Almost all cities, counties, and special districts will be in need of direct and flexible financial assistance. And I know that the League, CSAC, and CSDA legislative teams are working around the clock to try to secure additional state and federal funding for local agencies to help them weather this storm. And that brings us to where we are now. Each jurisdiction is grappling with a unique fiscal challenge. Our speakers today are going to give you some guidance specifically for those of you on the ground and offer some short, medium, and long-term strategies to shape your thinking around this. Next slide. We are joined today by 3 experts with decades of experience on these topics. We'll hear from 2 speakers, and then we'll go into a Q&A where we can dive deeper on the issues that matter most to you. There are a number of our partner organizations offering guidance on various topics related to the financial impact of COVID. So after our discussion, we'll be sharing additional written resources, webinars, and other guidance to help you along this journey. The plan is for you to help you navigate this crisis with all the tools and resources available to local governments. So let's get to know our panelists. We are so grateful to have these 3 experts with us today. We've got Bobby Young. He's the Director of Client Services for HDL Companies. We have Dennis Kauffman. He's the Assistant City Manager and CFO for the City of Roseville in Placer County. And Nick Romo is the Fiscal Expert for the League of California Cities. Nick won't be presenting today, but he's available throughout the Q&A to tell you everything you need to know about what legislative solutions might be available at the state or federal level and what organizations like the League are pushing for statewide to help alleviate this fiscal burden. Thank you all so much for being here. Next slide. Our first presenter is Bobby Young. Before Bobby gets on the line, let me tell you a little bit about his experience. He has more than 20 years of local government experience. At HDL, he leads the team that develops reporting enhancements and heads up efforts around sales tax and transaction tax districts. Prior to joining HDL, he spent 13 years at the City of Costa Mesa, where he was finance director for the last 5 years of his tenure. In that role, he led the city's strategic financial planning and decision-making and fulfilled the duties of city treasurer. Bobby also spent time as an external auditor who specialized in assessment and documentation of internal controls and coordinated the review and preparation of comprehensive annual financial reports, or CAFRs. Bobby's an active member in municipal affairs with both the Government Finance Officers Association, or GFOA, and the California Society of Municipal Finance Officers. We are proud to have HDL as a longtime corporate partner of ILG, and we're excited to have Bobby here to speak with you today. And as a reminder, you may ask questions via the question box throughout the presentation, and we'll try to get as many of them answered as possible during the Q&A portion of the webinar. Bobby, I'm turning the controls over to you.
Great. Thank you so much, Erica, and thanks for everybody joining us this morning. As you just heard Erica explain, every community, every agency is slightly different, and so what I hope to do here is just kind of talk about what we see coming on the horizon for every agency, what you're going through. A lot of the kind of those details and those impacts, the whole way that those agencies were able to detail that was with the techniques and the questions that we'll be talking about coming up here. First and foremost, anytime you're in a crisis situation, it's always good to assess the issue itself and then understand how to solve or work through it. So here is how everyone will be evaluating their own situation. Go ahead and go to the next slide. First and foremost, revenues. Understand how and why your revenues are decreasing. It is at the crux of the issue with the economic shutdown, business closures. First and foremost, are your revenues more driven by sales tax, property tax, TOT? Not just from a percentage of your overall revenue structure, but really ask that next level question, which is, what's the underlying economic conditions that are going to move those revenue sources? So on sales tax, are you more heavily weighted in general consumer goods and autos that might be impacted just a little bit differently, or maybe a little bit more restaurants and tourism driven that'll be most certainly impacted immediately? So on a special district side, think about your user charges that are dependent on customers, kind of like industrial and manufacturing that are going to be impacted by the shutdown. Or will your revenues increase because a lot of your customers are working from home and consuming more, whether that's water and electricity? So really not just kind of looking at this from, hey, we have a crisis and everything's going to drop, is really get down into the weeds on your revenue streams to figure that out. Next slide, please. So once you do that, you're establishing your new year-end revenue. Being realistic here doesn't necessarily mean your worst case scenario. Just a month ago, many people wanted to look at, well, maybe we're closed all the way through, or businesses are impacted all the way through the fall. We at HDL felt like we're probably going to be closed through the end of May. And here we are at the end of April looking at a potential, through May reopening of businesses. So it's important to be realistic with those revenue assumptions as you look at them. Also on that revenue side, speaking now on this side as a consultant, lean on your consultants, rely on your consultants. This is when most of us are really ready to help and eager to give you information that can help you in the decision-making process. Once you've got those impacts and you have an idea, a realistic point of what's going to happen or where it might be, you're looking at your more immediate need, your cash flow. The league has been doing a ton of studies, great studies on reserves and trying to let communities know maybe ahead of time if they haven't already assessed their own situation. Really look at what's needed for payroll, maintenance and operation, capital projects. If your money is pooled all together, understand how individual funds might be more impacted, less impacted. So really, first and foremost, assess the immediate needs of your cash flow before taking kind of that next step. Next slide, please. Right after your cash flows, you'll be looking at your expenditures and what to adjust. Here are just a few questions that every staff member is going to be asking themselves. Every finance department will really be kind of going through. But if you're in an operational department within a county, you should be getting ahead of this, which is, should the city or the agency consider a hiring freeze to control payroll? First and foremost, payroll every couple of weeks. And again, that immediate cash flow concern, is that needed to happen? What about unspent overtime dollars? With the change of situation, is your community going to be affected by increased overtime? Or maybe you've got large entertainment venues that would normally use city overtimes for staffing and things like traffic control. Maybe those aren't going to be happening. So maybe you can adjust your expected needs over these coming couple of months to adjust. Should departments be allowed to purchase essential items only, kind of getting to core services? Will utility bills decrease given everybody's working from home? Can that also affect or help reduce expenditures when you're kind of gauging your fiscal condition? For special districts, will expenditures increase given increase in customers working from home? So if your revenues are going to increase, is it likely that the expenditures are going to increase as well? So just different things to consider while you methodically go through the impacts. Next slide, please. Here on your, just a reminder, your large capital projects is probably the easiest place to start putting expenditures on hold, so long as those projects haven't started yet. Kind of get more frequent progress updates from your departments, from the builders themselves, anything like that to really kind of assess, hey, what can we put on hold while we weather this immediate storm these next couple of months. If the revenues are expected to increase, so kind of again with the special districts along the lines of infrastructure spending, if revenues are expected to increase or cash flow is strong, management might actually be considering taking on one of those large projects right now because financing opportunities or overall costs might be a little bit lower, given the need for some contractors to stay working or pick up more jobs. It could get fairly competitive. So don't be alarmed if you have some that are looking to spend money during this period where most are looking to contract a little bit. Next slide, please. For planning for fiscal year 2021, so many agencies were already in that process, and now all of a sudden the landscape has changed. What you've done for fiscal year 1920 then starts to carry through to 2021. You kind of have to work through it again methodically. You shouldn't just jump ahead before figuring out these next couple of periods. Start with your revenues. Determine those forecasts, and you're starting from your 1920. Here, with the great uncertainty, you may not be right, but you have to start from somewhere. And if you used a more realistic approach in evaluating 1920, and that carries forward, at least you know your starting point. And especially those of us on the finance side were looked to during this period to lead, to provide either answers or at least be able to detail what our starting position is. So it's really important to get comfortable with, you may not be right, but you gotta jump off the conversation somewhere, really start. You're evaluating your expenditures next with that 1920 viewpoint. If you're gonna put positions on hold or have a hiring freeze, does that continue? How long? Start to reduce some of your salary expenditures. If cuts are necessary, and no doubt they will for many, there's a couple of different ways your agency can go through that. Be looking at a 5, 10, 15% scenario. It's not easy by any stretch. Usually by the time you hit 10 and 15%, especially at this point in time, those are very real deep cuts into service. But again, from that finance perspective, just go ahead and start getting those ideas on paper just to see what they look like. Management, councils, board members, community, they will be asking a lot of questions. Hey, have you thought about this? Have you thought about that? The 5, 10, 15% scenario really helps get you into that mindset. You might then also just be focused on least essential, working towards most essential. So reducing kind of the least essential items, and then work towards more essential staffing, and then public service and other operating impacts. Next slide, please. Think about documentation. It's going to be very difficult to keep track of all of the moving pieces, but it is very necessary and will come in extremely beneficial in the coming months. And it's just that reminder. It is extremely difficult. There's a lot of moving pieces here, but try to document as much as possible for these next couple of reasons. One, the last items to get cut will usually be the first items if conditions improve. If we end up with a stronger rebound coming out of this, then the community is going to be asking, what are the first things to put back in? Communication of what was reduced to help the community understand. As you work through these next couple of months into the adoption of the budget, if it requires cuts in services, you want to be able to clearly lay out and keep everybody moving in the same direction with your messaging. Listen to the community and the customers for what they're willing to accept if you have to reduce service cuts. When it comes to pen and paper, it's real easy to make dollar cuts. It's very difficult then on the operational side, and then to be able to describe what those impacts will be to the community. But you've got to listen to the community. Some will not want to cut into public safety. The more that you're listening to that from a management perspective, you then can say, well, I know that's not a starting point for reductions, and you can then really help the conversation move forward. Openly plan and be mindful of your messaging as you go. If your community, if the financial situation was already tight, you really want to make sure that you understand everything that you say, because the community is already sensitive to your words and to what you're talking about. Really think through how you're going to communicate and bring everybody along together, but then what those final solutions and recommendations may be, up to and maybe including future tax measures. You want to start that and be mindful about how you communicate towards that part of the process. I think that was all I had for right now.
Great, Bobby, thank you so much. We're getting lots of questions in the question box, and we're excited to hear more from you during that Q&A. Please continue to drop your questions in, and we'll organize them and sort them as best as possible. And now we'll gear up for our next presenter. Next slide, please. Dennis is our next presenter. Dennis is the Assistant City Manager and Chief Financial Officer for the City of Roseville. He's a CPA with nearly 25 years of experience in government accounting and financial management. Prior to his role with the City of Roseville, Dennis was with the City of Sacramento's Finance Department for over 16 years, where he served as Finance Operations Manager and Accounting Manager. In addition to his CPA license, Dennis is a Certified Public Finance Officer by GFOA and a Certified Government Finance Manager by the Association of Government Accountants. Dennis is active on committees for GFOA, the California Society of Municipal Finance Officers, and the League of Cities. As Dennis shares his perspective and insights, feel free to add in any questions you have, and we'll get them in during the Q&A. Dennis, thank you so much for being here and sharing your guidance today. Your mic should be live.
Good morning. Thank you. I'm happy to be here to share my experience and some strategies for navigating this strange period of fiscal uncertainty. For those of you who aren't familiar with Roseville, Roseville is located northeast of Sacramento in Placer County, and we have a population of approaching 150,000 and a general fund budget close to 160 million. I wanted to start out just talking a little bit about liquidity, because it's a word that we hear a lot of times during fiscal crises, and COVID-19, the pandemic, caused a shock to the economy and to the financial markets. And although in government we tend to focus a lot on the budgets, governments do run like a business, and cash is king, and we need positive cash flow, and we need liquidity. And when people talk about liquidity, they really talk about, the ability to pay our bills when they come due, whether it's payroll, debt payments, payments to vendors, payments to CalPERS, all of those critical outflows of cash. And so one of the first things that we do when we're in a period of crisis like this is update our cash flow forecasts and monitor them closer than we might during a regular period of the economy. And so there are a number of different ways to do cash flow forecasting. Some agencies do it at a very high level. Some agencies do it at a very detailed level. But in a period of time like this, it's really important to take a look at your cash flow forecast. Focus not only just on your general fund cash flows, but also your total cash and investment pool for all of your funds. And to focus on that cash flow, both in the short term, how am I going to pay my bills over the next month, but also with the long-term perspective, because we don't know, when this uncertainty is going to ease. And so it's important to be able to look forward into the rest of the year and be comfortable that you have sufficient liquidity. And so, one of the main ways to look at cash flow forecasting is to focus on your top 3 to 5 revenue line items, usually your biggest tax revenues, and the same thing on the expense side of the ledger. Not worrying about a lot of the small items, but just to get a feel for the timing of your large revenue and expenses, and evaluate whether you will have that liquidity or that positive cash flow that you'll need to pay those bills. One of the things that happens in California, because of the timing of our property tax system, is in times like this, when we have an economic downturn, many agencies look for options for dealing with short-term liquidity problems, and one of those is a tax and revenue anticipation note, where you finance on a short-term basis that deficit in your short-term liquidity, and those became much more common during the Great Recession. And if this lasts longer than we hope, I wouldn't be surprised if we saw more agencies taking a look at tax and revenue anticipation notes, primarily because we start spending our budgets in July, but we don't get that first property tax payment until December or January, depending on what county you are in. And so that's something to keep in mind. And so really right now, as it comes to liquidity and cash flow, preserving cash through whatever cost control measures make sense for your agency should be a priority now. And I'll mention a couple of those strategies in a minute. Before beginning to attempt to kind of forecast the future, it's really important to understand the local economy that your agency is in and how it's being impacted by the pandemic. Bobby talked a little bit about this, and for Roseville, we looked at what are our top revenue sources, particularly in the general fund. Sales tax for Roseville is our largest revenue source because we have a regional auto mall and a regional shopping mall. And we were fortunate to have our voters approve a half-cent local district tax a year and a half ago. And so that is added to our sales tax base, but that just means that we're that much more dependent upon sales tax revenue. And as you know, during this downturn, sales tax revenue is being affected the most for many agencies. Our second largest revenue source is property tax. And our third largest tax revenue in Roseville is the hotel tax, or transient occupancy tax, TOT. And so we're taking a look at each one of those tax sources and digging into, with sales tax industry by industry, how do we think they're doing now, and how do we think we might come out of this downturn? And same thing with our hotels. Each government's hotel industry is a little bit different, and so we're looking at the types of tourism that come into Roseville and how that tourism might return when the stay-at-home orders are lifted. We're also looking at some of our other large revenue sources, like our utilities. Roseville has water, wastewater, refuse utilities, but also has an electric utility, and so we're identifying how this downturn is affecting their revenues as well as their expenses. On the expense side, it's interesting because our refuse, our waste services, commercial obviously is down, and so our commercial revenue is down. But on the residential side, we don't have any flexibility with the revenue, but our expenses are up because people are at home creating more garbage and green waste, and so the tipping fees, the expenses related to that operation have gone up. One of the key things here with understanding the local economy is really to work closely with your city manager, your department heads, and in particular economic development staff, because they have those contacts with the businesses in your community, your chamber of commerce, your tourism and hotel partners, and gathering as much of that information from them can really help in forecasting the future. So when I talk about forecasting, Bobby got into this as well. The way we did it in Roseville is we started looking at the current fiscal year, 2019-20, starting with a very big picture perspective, focusing on our top couple revenue sources to kind of understand the range of the problem. And we created 3 different scenarios initially. One is very positive, optimistic scenario, which isn't turning out, unfortunately. We have a baseline, kind of middle of the road scenario, and then we have a pessimistic scenario. And so now, that's where we started, very high level, big picture. Now we're drilling down into the details. We've involved most of our larger departments. We've partnered up with them to understand how they're evaluating their revenues and expenses in each of their departments. And it also gives us a second set of eyes as we look at the general fund as a whole, and we look at other large funds that the city has to understand how this downturn is affecting our forecast for the current year and how we're going to end the year. One of the things that's come to light is it's really important about how we communicate these things. And I'll talk about communication a little bit later, but one of the things that I've seen is where different agencies will communicate their information slightly differently. Some will talk about the revenues declining 8% this year, and others will talk about a 50% decline. And I think it's real important that we all, clarify when we're talking about revenue declines. As my example, are we talking about an annualized percentage decline, or are we talking about the decline in the April through June quarter, for example? Because I've had some people say, well, how can this city's sales tax have only gone down 8% when we know for April through June ours is going down, X percent. So that's really important that we focus on how we communicate. we are, like I said, using ranges or various scenarios because there is so much fiscal uncertainty, and it's really important to communicate about that uncertainty to all of our stakeholders, particularly as we talk about forecasting. Part of the problem, as you know, is we won't know the final sales tax numbers for the January through March quarter until the end of May, and we won't know the April through June quarter until the end of August. So that makes forecasting the current fiscal year very difficult. And then as we look out to next fiscal year, 2020, 2021, and beyond, one of the things that I've read in a number of journals is, when we're in a crisis, when we have a sharp downturn like this, we don't want to forecast too far out into the future when we have this period of great uncertainty. We need to continue explaining the uncertainty, the causes for it, the nature of it, but remind everyone no one has a crystal ball that works. And so now is the time to kind of focus on forecasting the current year, forecasting next year, because we're all working on proposing budgets for next year. But beyond that, there's so much uncertainty that you get really impossible scenarios to forecast out beyond that. A lot of people have asked, as we're thinking about forecasting, well, what about property taxes? What about CalPERS? And, one of the good things about forecasting in government is some of these things are trailing indicators. For example, property tax is based on the January assessment from the year prior. So the property tax revenue for next fiscal year is based on the January 1st, 2021 valuation. And so the impact on property tax revenues will be limited next year, potentially to supplemental tax bills, maybe some early appeals that start to come in, but it will really be fiscal year 22 and beyond where we have that potential for property tax revenue impacts. And the same thing with CalPERS for local agencies that have their pensions with CalPERS. Any impact of this downturn on CalPERS, first of all, depends on the market performance through this June 30th of 2020, and we have to wait and see how the markets perform for the next couple months. And then we can start forecasting what those resulting CalPERS cost increases will be for fiscal year 23, 2022-23, because it takes CalPERS a while to do those actuarial studies, and then they give us time to build those cost increases into our budget. And then those cost increases are ramped up over 5 years. So we'll be looking at increases potentially from 23, 24, 25, 26, 27, based on the market performance through June 30th of 2020. So as we've, in Roseville, developed our proposed budget for next year, given all of this uncertainty, we took the position of proposing, very similar to what the state of California is doing, proposing a status quo or baseline expenditure budget. And what that means is we looked at last year's budget, we updated some targets for our services and supplies, which I'll touch on in a few minutes. And then we were halfway through our budget process, well, more than halfway through our budget process, and departments had submitted requests for augmentation. And the approach we took was we were only going to consider critical requests for augmentations. Otherwise, it was going to be a status quo or baseline expenditure budget. And the message that we gave our departments was these requests that aren't being approved now because they're not critical are going to be deferred until October. And in Roseville, we're planning to return to the City Council in October once we have the sales tax information through the June quarter, and more information about the status of the stay-at-home orders and the impacts on the economy. We'll return to our City Council in October with more information and potentially budget adjustments as a result. And so what they did to our budget process was our departments had submitted their requests. At the end of March, we have meetings with our city manager and our city manager's office with each department to review the budget requests. Our departments make a presentation essentially to the city manager about their budget requests. And because of the pandemic and because we weren't working in the office because of the stay-at-home order, we condensed those meetings, which typically take a week of time, and we condensed that into one smaller meeting that just took place with our city manager and our assistant city managers and our budget team. and then we communicated the decisions out to the departments with that commitment to return to their requests in October, except for the ones that were deemed critical. So that was our approach on the expenditure side for the proposed budget. But then on the revenue side, we really have to take into account this fiscal uncertainty. When will the stay-at-home orders be lifted? How will that be phased? And just yesterday we're hearing more information from the governor about how that might be phased. Some of it sounds like it could be months, and so we're trying to understand, how will that affect consumers? How will consumers respond to reopening businesses? And how will the recession and the impact that it has had on individuals and families and businesses, how will that affect consumer confidence and their spending? And then tying that back to, how will this affect my city's revenues for our proposed budget? So I mentioned that we created several scenarios, and the scenario that we're inserting into our proposed budget is somewhere between our middle of the road and our optimistic scenario, because our pessimistic scenario is very pessimistic. And we've considered input from our various tax consultants on sales tax, property tax, hotel tax, and like I said, we're going somewhere between optimistic and middle of the road, and that will allow us to almost balance our budget. Still a significant reduction in our revenues, and then it will require a draw from our economic stabilization reserve that Roseville has built up. So as I mentioned, we will return to City Council and to the community in October after we have that sales tax information for the rest of this fiscal year, and we know what has happened with the stay-at-home orders and how consumers are behaving. So I wanted to talk a little bit about other budget actions to consider. I mentioned we're going to use part of our stabilization reserve as to balance our budget. As we've thought about our reserves, one of the things that it's important to do is, review your city code and your policies about the reserves that you have, and what the intent is for their use, if there are requirements for their use, to make sure that you're aware of those. And then we want to use our reserves strategically. As we're forecasting the impact on the current fiscal year, we are recognizing that we may need to dip into our economic stabilization reserve to some extent. But we also want to preserve it as much as possible, because there is so much continued uncertainty about how the economy will recover. And so our city, like many cities, implemented a hiring freeze. Our hiring freeze comes along with what we call a critical hiring committee. And so our city manager and assistant city managers and HR director and CFO meet twice a week. And if there are requests to fill a critical position, we have a form and a process, and a justification has to be made to fill any position, whether it's a regular position or a temporary or limited term type of position. And so that's one of the measures that we have for cost containment. Another thing that we do as part of our annual budget process that I think is important for all agencies to consider is reviewing department budgets for potential savings in services and supplies. Some agencies are so big that it's not necessarily part of the annual budget process to look at each department's individual budget, but that's as we're looking for ways to preserve cash and preserve our reserves, I think that's one way that agencies should be looking at their budget. Certainly, there's the line items that come to mind, like non-essential travel and training, and obviously this downturn has made that a little bit easier, since we're unable to do travel and a lot of our training. Another area that Roseville has implemented is a pause on non-essential projects or non-essential initiatives. Several examples come to mind. One of them is our city manager wants to implement a customer relationship management software for a number of our departments to use to track our customer service interactions and to improve customer service. And that project was going to move forward in the next few months. and there was a position associated with managing that project and the CIP associated with procuring the software and implementing the software, and that project has been put on hold. We're also planning to replace our fleet management system next year, and we're going to still recommend funding it in the budget, but we're going to put it on hold until we have some certainty about the city's finances. And then we also had in process an organizational assessment of one of our support departments, and we've also put that project on hold. So it's just another way of kind of reevaluating your budget and finding ways to preserve cash, preserve your reserves until the uncertainty is reduced. Another area to consider, I know a lot of cities regularly update user fees and charges to maintain cost recovery. Roseville does that every 2 years with a study, and then in between the 2 years we do a cost CCI adjustment and inflation adjustment. For agencies that don't regularly have a process to update your fees and charges, that's certainly one way to help balance your budget. To make sure you're maintaining cost recovery. You just have to use that political consideration for thinking about the proper timing to increase fees. We are actually recommending to our council to postpone the increase of the fees based on our most recent study for 6 months until we come back to council in the fall, and then we'll recommend making our fee adjustments at that point. A couple other things that I think we should be doing when we think about our budgets is seeking out federal and state grant opportunities. I know that there hasn't been a lot of opportunities out there from the stimulus bills so far, but there has been some. There has been some CDBG money. I understand there may be some money in the CARES Act to reimburse agencies that are self-insured for unemployment claims. And so to the extent that agencies have laid off any employees, temporary or regular, there may be some opportunity for reimbursement there. As the state and the federal are looking at future stimulus bills, I know in the case of Roseville, we're actively advocating for local governments to get some stimulus and future stimulus bills, as well as the state sharing some of the stimulus that they received. We're advocating for that as well. And then we're focused on FEMA reimbursement for any eligible response expenses to this emergency. And then as Bobby mentioned, one of the other things we're doing is kind of going back and looking at what actions did our agency take during the Great Recession, just as part of our planning, knowing that this recession is a lot different than the last recession. But there certainly will be lessons learned. There's been a lot of turnover since the last Great Recession, and so we're going back and revisiting that, as well as all of the kind of HR rules and policies and MOU language around furloughing employees, or if we get to the point of laying off regular employees, we want to be prepared. We want to understand what those rules are. And so I think that's planning that we ought to be prudently doing now, with the hope that we don't have to go there. I just wanted to wrap up just mentioning a little bit about the importance of communication. The city I work for is really big on communication and community engagement. And I think it's real important to remember kind of the basics of communication so that we maintain our credibility, both as finance officers like me and for the agency itself, for the government itself, to maintain credibility. And so as we're communicating information about the financial condition of the agency or about financial forecasts, I think it's real important to kind of know your audience and know when to communicate the big picture and know when to get into the details and when not to. Transparency obviously is very important anytime, but especially in situations like this where our elected officials, our community wants to understand how is this recession affecting our agency. But you still have to ask yourself, how much information do I need to share? Oftentimes we have, an hour of information, but we only have 10 to 15 minutes to share it. So we have to condense it down. And then how often do we share information? Because it could be that we don't get a lot of new information in 2 or 3 weeks, but people want an update. And so figuring out how often to share is important. And then it comes down to what is the story that we're trying to tell? What is the purpose of our presentation? my feeling is it's better to share your information than over communicate, but you got to know your audience and you got to know what level of information they're looking for. Finally, I just wanted to mention, as others have mentioned, we're all in this together. And one of the things that I think it's important for all of us to stay connected. And, we have our peers in other agencies. We have the professional organizations that we participate in. There have been so many webinars offered to help kind of refresh our memories about forecasting methods, about how to do budgeting during a recession, lots of market updates related to investments and debt put on by underwriters and municipal advisors, a lot of government affairs updates because we should be advocating for resources for local governments. Don't forget to reach out to your consultants, your municipal advisors, your tax consultants, your bankers. They all have information that can help us not only forecast, but just to stay in contact. And the more information we can share with each other, I think the more it helps. And so with that, I'll just thank you for including me in the webinar today. And I think it's time for Q&A.
Dennis, thank you so much. That was really informative, and I appreciate the perspective that you've offered. Next slide, please. So we've now reached the Q&A portion of this webinar, and we've been collecting your questions throughout both presentations, and we'll continue to do so through this portion as well. If you do have questions, feel free to drop them into the questions box on your on the far side of your window, and we'll do our best to get to those. As a reminder, you can pose a question to any of the three subject matter experts here on the screen. We've got Bobby with HDL, Dennis with the City of Roseville, who you just heard from, and Nick Romo, who you haven't heard from, but he's with the League of California Cities. And I just want to make sure, while I'm chatting, can I make sure that we have a sound check on all three of our experts? Bobby, are you there?
I am here, yes.
Dennis, are you up?
Yes.
And Nick?
Hello, everybody.
Great, Nick is there too. Wonderful. So we'll just start really briefly with a framing question, and I'll take this for both of our panelists. You were both working in this industry during the last recession, and Dennis, you specifically mentioned going back to what was done in the previous recession as you think about your budgeting and your forecasting, your general approach. For Bobby and Dennis, can you both talk about what lessons you learned from that experience and what you think still applies now, given that this is different? What applies, and then what is really not the same?
Dennis, you want to start off there?
Sure. What applies now and what is not the same? Well, the suddenness of this downturn makes this very different. And I think we had uncertainty during the Great Recession. We have uncertainty now. We don't know when this is going to end. We don't know how deep it will be. We don't know how people will respond. And we certainly had a lot of that type of uncertainty with the Great Recession. I think that one of the good things is I think the agencies, I think a lot of agencies are better prepared for something like this because we went through the Great Recession. And that there were a lot of lessons learned during the last recession for us to draw from. But this one is significantly different because, businesses are closed and people are losing their jobs, and nobody knows, how it's going to affect consumer confidence and consumer spending. And so, I think in many ways there's just a different type of uncertainty that we just have to figure out week by week.
Yeah, I'd largely agree with that. The fact that we had been 12, almost 13 years since a recession, people were already kind of getting ready for a downfall. How it's different, most notably. The Great Recession lasted 19 months. Officially, felt more like 2 years. This is more sudden, and we've never, really shut down the U.S. or California economy like this. So as we've done a lot of analysis back during the Great Recession to try to gauge it, it's very difficult to, because of the length of time of the impacts. And so, which may also, I think it gives us a little bit of hope for the rebound to not be quite the same as the Great Recession, but the suddenness of it is definitely has thrown a new mix to it versus a normal traditional recession. But I think everybody was kind of on their toes waiting for something to happen, just not quite this level.
Erica, this is Nick. If I could add something.
Absolutely.
Hi again, everybody. Nick Romo. I'm the League's legislative representative for revenue and taxation. I chose the right time to take on the job. I got promoted up on March 1st, so I think I hit the jackpot. One of the things that's also that we're looking at least on the advocacy side, the government affairs side, is that the state is also in a much healthier fiscal position than we were in 2008, 2010 time period. The state has built up significant reserves. They have created much more balance in its large government programs. A number of our local governments as well, you have taken heed of that advice and have saved for rainy days as well. So, and then looking farther back into longer range, cities, particularly cities, are less dependent on state revenues as we've created protections for local revenues. So just adding to that larger, maybe teeing myself up a little bit for our advocacy efforts and thinking about where we are on a macro level from the state's fiscal position.
That's perfect. It was actually a perfect segue. Do you want to talk about what statewide organizations like the League are kind of doing to help address this fiscal cliff at the state level and at the federal level, if you can?
Oh, sure. Thanks, Erica. It was presented earlier that the League has put out an estimated number of a $7 billion general revenue shortfall over the next 2 fiscal years, and definitely have the 2 other panelists on the phone to thank for their input and advice. And as we built out those numbers, we're seeing cities are reporting deep impacts to core services and significant adverse impacts to the departments that support those services, including our workforce. Our laser focus is on 3 things statewide and at the federal level. One, and I'm happy to answer further questions about what's going on at the federal level. But the most important thing is that we're asking for direct and flexible aid to backfill lost revenues. Lots of dollars have been sent to California. Upwards of $15 to $20 billion have been sent to California from CARES Act 1 and also the previous bills prior to CARES Act. But they're all rather restrictive and they do not account for the reality that the major impact is the lost revenues. So we are asking for at least a $7 billion stabilization fund, both from the state government and the federal government. We're also asking the state side of the CARES Act dollars is near $9 billion that they're going to be receiving to reimburse for CARES Act COVID-19 related expenditures. We're asking for a fair share of those dollars. And I know that both also CSAC and CSDA are also part of that conversation for the state to share parts of those fundings for the cities and counties that were not eligible by the population threshold of 500,000. So smaller cities, smaller counties should get a fair share of the CARES Act dollars. And as Dennis mentioned, we're trying to work with the state and our partners to build a strong cash flow mechanism for us, short-term borrowing, tap into the available resources that the state has, that the Federal Reserve has unlocked, and try to work together to create a larger vehicle that we can all access and help with continuity of operations. So those are our 3 pillars. We're working hard statewide and at the federal level.
Thank you so much, Nick, and I appreciate that you referenced the counties and the special districts as well. I know that those associations are actively seeking the same funding or similar funding for each of their constituents and members, and that's a huge priority to ensure that it's not limited to certain sizes and populations. Moving on to a couple other questions that we're seeing. We've gotten a couple of questions for the panelists about staff costs and reducing staff. And we started to touch on that, and they're asking for a little bit more detail about the strategies for reducing expenses and what considerations you should explore when determining if and when to take that action.
Well, I can just throw out a few strategies that come to mind. I mentioned earlier a hiring freeze, and I mean, part of that is to preserve cash, but it's also to create vacancy savings that, you know, if this continues and we have to get to a point where we need to reduce positions, we would prefer to reduce vacant positions through attrition than lay off staff. And so I think that's kind of the most important thing. One of the things Roseville did, because we had facilities closed and Roseville uses a lot of temporary part-time staff, we actually laid off a lot of temporary part-time staff, and that helps preserve our regular employees. But like I mentioned, we're also researching and looking back at the Great Recession and looking back at our HR policies for kind of the scenarios for furloughs and layoffs, hoping that they won't be needed. But because of the uncertainty, we want to be prepared. We're also looking at MOUs with our bargaining groups to see what kind of reopener language is in each one. We're also looking at MOUs from other agencies to see if there is reopener language that other agencies use that we might want to explore with our unions in the future. I think it's important to keep in contact with your labor groups to kind of keep the information flowing, but also to maintain those positive relationships. And then one of the things that we're focused on is, you know, aligning whatever reductions we need to do with our city council's strategic plan and their goals and strategies. And then the one thing that's come up a lot of employees have asked, well, you know, during the Great Recession, we did a golden handshake program. Are we bringing that back? Because I think that there are probably some employees getting closer to retirement who are looking for that kind of bump on their way out. And, you know, my advice in that scenario would be to really take a close look at those programs with an actuary, because sometimes those golden handshake programs are really good short-term, but end up having long-term costs that may not be intended. So just go into those with your eyes wide open.
Great, thank you. Along the same theme of staffing reductions, can any of you speak to whether the agencies that you're working with or come in contact with are reducing 5 or 10%?
For those that we're working with at HDL, they're doing the analysis right now. There's nothing that they've committed to, and I think that speaks a lot to the uncertainty. They want to wait to see before they take such a drastic measure. They want to wait and see how conditions are over about the next month before implementing those. So I think the approach that Dennis and Roseville are taking, which is to focus, build a budget, and then be open to reevaluating in October once we all start getting some data from this period, is very reasonable and probably the best approach to help, you know, especially employees and those staff costs to work through the process. Everything around staff costs and reduction, whether it's salaries or layoffs, furloughs, really does speak to the communication piece and bringing your employee groups along with you. Do frequent presentations while you'll do budget study sessions for the council and the community. Hold very specific communications and sessions with each one of your employee groups, just to make sure that they're not surprised, they're not taken, they have a chance to let their voice be heard as well. It'll really help when it comes time to implement the more drastic measures. But most agencies are just looking at those possibilities to evaluate what would be involved with that type of cut.
Excellent, thank you. I want to move to some questions we're getting about budget planning, TOT, and more. Do you have any suggestions for the best methods for TOT projections for fiscal year 2021 and fiscal year 2022 for those that are biannual budgets?
Sure. So, and I didn't do maybe a full intro for the company as my part. So at HDL, we do sales tax analysis, property tax analysis, but also business license, TOT, cannabis, and other revenue streams for our clients. Our TOT employees are really for our clients just evaluating kind of where they're at, where they've been, how many hotels they have, what was their occupancy, just getting kind of that baseline, and then figuring out, okay, for that community, are you more business-based or are you more tourism-based? And they're both likely, impacted just the same now, but that really speaks, that kind of information will speak to the rebound and how you want to forecast coming out of this. The easiest thing for businesses to do, even as we come out of the shutdown, will be to hold travel costs down. And so that business traveler may not be so quick to come back. But what we do know is that businesses will need to facilitate business. It's probably the bigger unknown. As far as tourism and vacationing and that type of travel, it's evaluating, is it more local tourism, like some of our beach communities come in for people coming out, or is it more destination like Napa and Sonoma Valleys with wineries? And the likelihood here for the remainder of the calendar year, and this kind of speaks to a lot of our forecasts, probably not as strong. Maybe we're forecasting in anywhere from a 80 to 90% reduction for these next couple of months as we go through. In some communities that we know all their hotels have closed, then obviously it's 100% reduction. But then it's just a slow reopening to somewhere about 50%, closer through the summer months and into the fall. As we move into calendar year 21 or fiscal year, at the end of fiscal year 2021, probably start to see less of a decline, something in the area of 10 to 20%, and really kind of watching how your hotels are marketing to their customers. I had a very interesting conversation with some folks on will your hotels reduce the room rate in order to increase the occupancy, or hold their room rate high, given that they want to kind of keep the overall occupancy a little bit lower so they can control their staffing costs. Obviously, the higher occupancy you immediately get, you then in turn have to increase your staff costs to maintain that. So there may be some strategic positioning by your hotels. Always good during this period to reach out to your hotels to talk. We ourselves have been reaching out to the hotels on behalf of our clients. They have been very eager to communicate their story, what they're going through, and then start thinking through their plans. The hotel industry itself also be reminded that many of the individual sites are actually franchised. A lot of the hotels, about 70 or 80% of the hotels in the United States are owned by franchisees. And so, again, they're willing to communicate because they're the personal owner of it. And some of them may end up being pressed on their lease payments and property expenses that they may be looking a lot shorter terms in terms of being able to weather the storm if they weren't ready for this or not set up from a cash flow perspective. So those are our percentages, but really reach out to your local hotels because I think they want to talk just as much as anybody else.
Along those lines, and this is for any of the panelists, have you heard anything what's the latest, if any of you have heard, on when hotels and large venues might reopen? Could be a legislative thing for Nick.
We have seen some of our larger cities make their own decisions about closing stadiums and other larger events through the end of the year. But I won't go too far out beyond to say that the league and others are kind of in the same boat of listening to our county public health officials and state. The governor yesterday and the day before has started to spell out his 4 phases for returning back to normalcy. I believe phase 3 and phase 4 are when hotels and large events, live stadium events and concerts are allowed to happen under his thoughts. So, stage 3 and 4, what the timing of that still unknown, but that gives you a sense of how we're escalating toward back to normal life.
Thanks so much for that. I have a couple questions specifically for Dennis. We've got some interest in what you anticipate for Roseville's revenue loss duration, and then the percentage of loss subsequently recovered. Can you answer that?
Sure. Well, I'll start with the hotel tax, even though it's not as significant, not nearly as significant as sales tax and property tax for Roseville, but what we are projecting is very in line with what Bobby just shared, kind of getting back to 50% by December and close to 90% by next June. On the sales tax front, I want to emphasize, it really varies by city, because, every city is different. And so you really have to look at your, individual industries, your top 100 sales tax generators, because what we might be looking at will certainly be different from what others are looking at. But I will share, the range that we are using for this current fiscal year, kind of the middle of March through June, for our Bradley Burns sales tax, we're looking at between 7 and 14% reduction in sales tax revenue. For next year, in our proposed budget, on an annualized basis, right? This is annualized. We're looking at somewhere probably between 5 and 10% reduction for next year. So I hope that helps. I don't even want to talk about our pessimistic scenario.
Thank you for sharing those numbers, and we do have a couple other questions about sales tax and sales tax deferral. Can maybe Bobby talk to some of the impacts of sales tax deferral program?
Sure. So we didn't want to go into depth during this presentation, but I put together, HDL, we held a webinar last Friday that I hosted specifically on the deferral program. It's available on our website, hdlcompanies.com. We've got the copy of the Zoom presentation, but also the slides specifically related to it. Very high level here, 2 deferral programs that were announced at the end of March, beginning of April. One was the governor's executive order that allowed merchants with $1 million in sales tax liability statewide to defer their sales use tax payments for up to 90 days. Effectively, what that means here in the short run, that tax returns and tax revenue that might be received at the end of the first quarter sales activity, so that's January, February, March timeframe. By the end of April was when taxpayers needed to file and pay. The cash flow or the revenue streams back to local agencies from that would normally be in May. So that has the potential to move cash from the month of May into the month of July, August, when the second quarter sales tax returns will be filed. So that's kind of the first one, a 90-day movement. The second program is a 12-month deferral, only for really small businesses, classified as $5 million in annual gross taxable sales or less. They can defer up to $50,000 for a period of 12 months, and they would make those payments monthly. So with no interest, no penalties, All liabilities from that point have to be remitted by July 31st, 2021. So when we put those two together, revenue from first quarter 2020 first delayed 90 days into 2Q, and then at that point, small businesses only might choose to try and defer up to $50,000 and spread it over the next 12 months. In total, it's still a deferral. So, the kind of those two pieces, cash flow moving from one quarter to the next, all within, for anybody that has a June 30th fiscal year end, it would still be incorporated within the current fiscal year. So not much by way of budgetary impacts, just more cash flow from the month of May to the month of August. The 12-month deferral does have the possibility of moving that revenue stream then from fiscal year 1920 into fiscal year 2021. The impacts, we also created spreadsheets for all the data that we have statewide. We created some spreadsheets to give agencies an idea of what those impacts could be, and have those posted on our website as well. Feel free to look at those and determine the impacts for your agency or the possible impacts. But we have to remember on the bottom line budget, if we reduce fiscal year 1920 by either of these deferral programs, we have to remember to increase fiscal year 2021 because again, it's just a timing issue between the two. So that's kind of a quick overview on the deferral programs.
Perfect. Thank you so much. I want to do a quick time check for everyone because I know we're running up towards the noon hour and we still have quite a few more questions. I don't know the flexibility of our panelists, and so I will continue with our original schedule and just flag for everyone that if your question is still in the queue and has not been answered, we'll do our best to send you an email response if we can get that and send it your way. We are tracking by person, but we'll close with just a couple questions that we've seen about communication. You both mentioned, Bobby and Dennis, in your presentations about the value of communication specifically to stakeholders. There's a couple things that I've seen. One is, how do you engage the public in some of these planning decisions? And then the other one is, how do you work with your council? And how do you work with them and guide them towards leveraging and using reserves to solve the shortfalls? And what guidance can you offer to councils and then potentially to the public as it relates to this budgeting and forecasting process and priority setting?
Well, I'll give you a brief answer. Roseville did a really robust community engagement effort a couple of years ago that we called Engage Roseville that led to our half-cent sales tax measure. And through that effort, the city did a fabulous job educating the community about the city's finances, our revenue sources, our expense drivers, and used a number of different tools in that process, including one called Balancing Act that involved a gamification of the budget where the community could help decide what services were more important and what services were less important. And so one of the things that we're doing in a lot of our communication is returning back to that input that we gathered from the community during that process and talking about it. And as we move forward with the proposed budget and we come back in October and have to make adjustments once we have more information, we'll continue referring back to that information because it is relatively still current information. And then as far as engaging with our city council, for example, our city manager is briefing them regularly, and we're providing regular updates to them at our council meetings on the city's finances. At our last meeting, we focused on the current fiscal year, and at the meeting next week, we're going to be focusing on the context for the proposed budget for next year.
And along those lines, will you be presenting in June for the balanced operating budget and then revising in October, or what's your schedule?
Yes. We'll release our proposed budget on May 20th and have public budget hearings June 1st and 2nd. Adopt our budget, I believe it's June 20th. I can't remember the exact date. I think it's June 20th. And then the plan is to come back in October once we have that final sales tax information and know more about the economy at that point, and then make adjustments as needed.
Excellent. So we are nearing the hour, and panelists, do you have flexibility to stay on for 5 or 10 more minutes, or do you need us to shut down and keep the schedule?
This is Dennis. Yeah, this is Dennis. I actually have another call at noon.
No problem. I figured we did have that. So what we will do is try our best to follow up via email with those of you that we have email addresses for and additional questions on. We'll continue going. At this, it looks like we'll run a little bit over 12. Stay with us on the line if you can, and I'll certainly continue going through. We won't ask any more questions, but we will continue to take questions in the event that we can get those answered offline. So I'll move to the next stage here, which is just a number of resources. If you could move to the next slide, I want to show you that there are a number of presentations, websites, and reports on this topic that you could find useful that might answer some of your questions. We've got things that are related to websites related to COVID, presentations, and we'll make sure to also include the one that Bobby referenced. We've got reports and guidance that could be helpful from all different stages, whether it's the basics of municipal finance all the way through some other revenue options as it relates to COVID specifically. Next slide. We've identified that there's a couple great things, including some new COVID-specific guidance, and this is a great resource from GFOA that outlines some specific cash management techniques. Feel free to take a look at that, and when we send over this attachment with the PDF that has links, you'll be able to click straight through. Next slide. We also wanted to direct you to a few other upcoming webinars on finance, debt strategies, budgeting, and forecasting that are on the calendar, including a few that are happening this week. The CSDA budgeting session on Tuesday should be a great session as well, with some really good forecasting models and tips. You'll see that there are quite a few in this space, and we wanted to be a little different than all of those, but share these resources so that you have every tool in your toolkit. Next slide. And then we hope that you'll stay connected with ILG. We continue to develop programs and resources around the wide range of issues that are impacting cities, counties, and special districts. This slide shows all our social media handles and how to sign up for our e-newsletter. We do push out content daily on our social media feeds and do occasionally e-news alerts and monthly newsletters. And our focus is really on quality over quantity, so we promise you will not be overloaded with chatter. And with that in mind, we have one last request of you, for those of you that are still on the line. Before you depart, next slide, we'd like to ask one more poll question to help us determine what additional education or training topics would be useful for you to learn as you continue to navigate COVID. If you take this short poll, help us decide what topics and mediums work best for you going forward. The idea here is that we don't want to throw out webinar after webinar or resource after resource. What do you need? There's a lot of information going on about COVID. And if there's any specific training topics that you think would be relevant for you or your agency, feel free to write that in the question box now, and we'll track those too and define our stage 2 outreach and education related to this effort. Just give you a couple seconds to flag those things. Great. And we'll move to the next slide when the poll is complete. Excellent. Looks like we've got quite a bit and quite a lot of different options for you, and this is really helpful for us as we move forward. Next slide. Next slide. And this concludes the webinar. I just want to thank Bobby Young and HDL, Dennis Kauffman and the City of Roseville, and Nick Romo with the League of Cities for being here with us today. We do know how absolutely unprecedented this crisis is and how busy you all are and navigating it for your clients, your agencies, and your members. So thank you for taking the time to be with us today. And for those of you who registered, thank you as well. It's been an honor to have you join us. So on behalf of the entire team at the Institute for Local Government, please have a fantastic rest of your day.